Okay, and welcome back, students who are taking financial accounting. And we're in this series of videos, we are working on the Chapter 2 problems, Group B, that were assigned. And in the last video, last couple of videos, we had worked on problem 39. So now we're going to work on 40. And remember, if you have to, pause the video and write down the information. Um, when I look at this problem and what it's being asked, I just want to bring up that just like in the last problem 39, if you happen to be watching that, you know, I'm using blank PowerPoint slides to do this work on. It's just way too tedious to be reproducing forms and trying to write within the lines on the forms and so on and so forth. Okay, so just be aware that, I am ad-libbing, it's ad hoc, I'm going to present the information in the, proper, right formats, meaning columns and so on and so forth. I mean, sure, my handwriting looks sloppy. I'm trying to write fast. I talk fast because I don't want to take forever. I mean, as you can see, this problem here, is going to take at least a half an hour. Okay, but just bear with what I'm presenting versus what is also being given in the solution. So remember, work through the problem, compare it to the solution, right? And then if you don't understand something, obviously you're watching this video to try to be able to understand it, but you should be able to follow along from what I'm presenting versus what is actually in the solution, because remember, I'm not using lines on a paper here. And if you don't understand something about concept or process, go back and watch previous videos that work through problems and watch the theory videos. And if you're still not getting it, then definitely telephone and speak with an instructor. Okay, so it says here the trial balance at January 15th is as follows. Okay, so one of the things that I want you to notice here is that for this trial balance, they included the account numbers. Okay, and this is what a trial balance should look like. This is a good representation of what it should look like. All right. Then it says during the remainder of January, complete the following transactions. So we have some more transactions. It says journalize the transactions. Then it says open T accounts for the ledger accounts listed in the trial balance and enter the beginning balances at January 15th. Use the 4-column account format illustrated in the chapter. Enter balance for the January 15th balance in the item column. Post the transactions to the ledger using dates, account numbers, and posting references. Calculate the new balances at January 31st. So this is going to be a little bit more complicated, but to be honest with you, that's the way it should be. A good set of books should start looking like that. And then number 3 says prepare the trial balance. So with all of that said, the first thing we need to do here is we need to make these journal entries. So on January 16th, I collected $3,400 cash from a client on account. So January 16th, I collected $3,400. So that's a debit to my cash for $3,400 from on account. So I'm crediting accounts receivable for $3,400, right? Does this transaction affect cash? Yes. I'm collecting cash, so my cash is going up. When my debits equal my credits, so I'm debiting cash. I'm debiting cash for $3,400. Since debits have to equal credits, I'm going to credit what else? Well, I'm from a client on account. Well, on account means receivable or payable, and a client is a receivable. So that's why I credit accounts receivable, right? Perform services on account, right? So am I collecting cash? No. Am I affecting accounts payable or accounts receivable? Well, yeah, it's on account. And since I'm performing services, it's for a client, so I'm going to debit my accounts receivable for $1,200. and that means I have to credit something else, and since I'm performing services, that's service revenue for $1,200. Received $2,700 cash for services performed. So, whoops, the date is the 21st. So 1/21, I received cash for services performed in the amount of $2,700. So my credit to service revenue is $2,700. Purchase supplies on account for $400. Okay, so am I affecting cash? No. Right? Am I affecting accounts payable or accounts receivable? Yes. I'm affecting accounts payable because I'm purchasing supplies. So I'm going to credit my accounts payable for $400, and I'm going to debit my supplies for $400. Paid $1,400 in dividends. So cash is going out. So I'm going to credit cash for $1,400, and I'm paying dividends, so I'm going to debit my dividends for $1,400. Paid $2,100 on account, so we're paying off our accounts payable. Oops, I'm sorry, 27. It's the 27th. 1/27. So I'm crediting cash because I'm paying off my accounts payable in the amount of $2,100. So that's a debit to accounts payable for $2,100. So remember, these are separate journal entries here. All right, let's see what's next. Received $3,800 cash for services performed. Okay, so 1/29, I'm debiting my cash because my cash is increasing because I'm receiving $3,800, and I'm crediting service revenue for services performed of $3,800. Paid rent $1,000, so 130. I'm paying rent, so my cash is decreasing, so I'm crediting cash for 1,000, and I'm debiting rent expense. Oops, for 1,000. Wrong place for that. 1,000. And lastly, paid employees $2,400. Paid their salaries for $2,400. So cash is decreasing in the amount of $2,400, and that means I'm debiting salaries expense for $2,400. Now notice, if you've done these homework problems and you've been following along, okay, by now you know as you can see, I'm not spending a lot of time with this. You should be internalizing this stuff by now. I mean, I shouldn't have to explain why cash increases on the debit side or cash decreases on the credit side. And yeah, when you're looking at the other half of the transaction, you should be, the underlying concept is you look at the category of account, you think about what category it belongs, and then looking underneath that category, you choose the ledger account. If you're going into a new business where you don't know what the chart of account looks like, if you're paying rent, most likely they're going to have a rent expense account. But you can't just automatically assume that the chart of accounts for a horticulture business is the same as for an automobile, a car dealership, or for a restaurant. Okay, they have different account names. All right. They might not call it rent expense. Maybe they're leasing or something. you know, it all depends upon the business. So look at their chart of accounts. These are very, very simplistic, okay? And we're using the same accounts again and again and again. So you might feel like you're getting accustomed to them. You know, I certainly am. Just bam, I know which accounts. But then again, I've been doing this for 30 years, so I'm not having a problem with choosing an account or deciding that that was salary expense. But I want you, like I said, you're starting to internalize where you don't have to be thinking so much, and you're just gonna, just know what you're going to be using. But try not to just start mimicking. Don't mimic. You know, yeah, internalize, not mimic. If you have to be looking back to choose an account, you should be thinking through a process. Okay. If you're trying to trying to decide how to make a journal entry, you should be thinking through the process, right? That means you haven't gotten it for that particular, situation. But if, this stuff is becoming second nature, by all means, you don't have to be thinking it through because you've internalized that information. And when you come across something that's new and different, well, then yeah, go back and, through and think through that process. Okay, and that's what I'm going to have more of a tendency to do here. Okay, so now, I'm at 11 minutes, and it says here, all right, we've gone through and we've journalized the transaction. So now it says open T accounts for the ledger accounts listed. Okay, so it's telling us to open T accounts like we did in problem, 39B, okay? But then it says here, use the 4-column account format that illustrated in the chapter. So reality is we're not really using a T account, okay? Even though it says open a T account. Remember, they're calling it a T account when they should have said open the ledger account, okay? So I don't agree with that terminology there. But what they're trying to get you to do now is by looking at the 4-column format, they're trying to get you to start thinking along the lines of an actual ledger account. So this is going to be a little bit more difficult for me to be putting in the presentation here in the PowerPoint, because I can't be creating 10 like this 10 or so general ledger accounts. Okay, now I'm going to show it for the cash account, okay, and the formatting minus the lines on the paper. Okay, but what I'm going to do is once I've shown you what the cash account will look like, okay, I'm going to come back in the next video and I'm actually only going to use the T account, because remember, the T account is a tool to represent the general ledger account, right? And I can't have 10 different slides with the ledger accounts on. I'd be bouncing back and forth left and right all day long trying to post things and so on and so forth. So I'm just going to have a tendency to just use the T account in and of itself. But when you're doing the homework, when you've done this problem, your account should look like the general ledger accounts in the solution. Now, and like I said, I'll work with the T. I'm going to show the cash account as a general ledger account, and that'll be the end of this video. But then in the next video, we'll actually set up the T accounts and make the postings from the journal into the quote-unquote ledger accounts. All right. So when we're using this form, and if you're looking at the solution, that is a good representation of what a general ledger account should look like. It has the account title, and it has the account number, okay, which in this case is 110. Right? Then it'll have the date, it'll have the description, or in this case they're calling it an item. It's going to have a column called the posting reference, and we need that in order to be able to post from the journal into the ledger account. It has a debit column, it has a credit column, then it has a balance, which has 2 columns, a debit and a credit. So they call this 4 columns because we're looking really at 4 columns to show your debits and credits, okay, and the balances in the account. All right. So that's what they're talking about by having 4 columns. Right? I mean, even though when you're looking at it, you have 1, 2, 3, 4, 5, 6, 7 columns in all reality. All right, 2, 4. Let's see, 2, 4, 6. Right, 7 columns. So just, when they're calling it 4 columns, they're referencing these debits and credit columns. Okay, so I have a debit and a credit. That's 2. For my balances, I have a debit and I have a credit. That's 2. Okay, so remember, my drawing of straight lines leaves something to be desired. Okay, so this is what it should look like, and what we'll end up doing is we'll end up putting in the date for our beginning balance. So this will be January 15th, and my description might say beginning balance. Okay, as I post from the journal entries into the ledger account, I don't need a description, all right, or I don't need an item, all right. But when I'm doing something out of the ordinary, like having a beginning balance or having an ending balance, you'll put that in the description column. For right now, we're not going to use the posting reference, but let's just, since our beginning balance from our trial balance here says 2,700 as a debit, that is what we're going to put under the balance column on the debit side, $2,700. Okay. Now, as we make other transactions, and I'm just going to make stuff up here, okay, because we're not actually posting. I'll do that in the next video for the transferring of, for the posting of the journal entries. But let's say I have an entry for, say, 120, and let's say it's a debit for 300. Okay, I'm going to put the debit here in my balance column. I'm going to add up the debit of 2,700 plus the debit of 300 for a debit of 3,000. And let's say on 121, I have a credit of 1,500. Okay, well now I have a debit of 3,000 less a credit of 1,500, so I end up with a debit of 1,500. Okay, if I have, say, on the 23rd, another debit of 500, I'm sorry, another credit of 500 because I'm paying out, right? My cash is decreasing, so 1,500 less 500 gives me a balance of 1,000. And let's say on one more transaction, let's say now I make a sale and I get $2,000. Okay, well, a debit of 1,000 plus a debit of 2,000 gives me a debit of 3,000. So what you're doing here is you start out with a beginning balance, and then you post your transactions, and as you post them, you're giving them a page reference, whatever the, let's say this is a general journal, so I could call it GJE, and that happened on page 1, and this one, that's where it's coming from. And let's say this one here was from my payroll register, so PR, and that was on page 1. And let's say this here was a cash disbursements journal, so CD1. So whatever my journal name is and whatever page it is, that's what I'm going to write for the posting reference. So this might be a sales journal on page 1. Right? So when I go from the journal and I put it into the ledger account, I have to reference back to whatever that journal is, okay, as to where that information came from. Because when the accountant comes and he looks at this cash account and he's wondering what this is, well, he can go back and look at the payroll journal on page 1 and see where that transaction originated from in that particular journal. So that's the posting reference column. And then for the balance, oops, I want to use green. For the balance, this is nothing more than a running balance. So every time you make a line item entry, you're always updating the balance. And if the balance ends up being, let's just put one more in here, let's call it 127, and let's say that's for a credit of 3,500. Okay, well, I had a debit of 3,000 plus a credit of 3,500 means now I have a credit of $500. Okay, so it's just a running balance. And yeah, I'm overdrawn at this point in time, so I know I have to immediately make, at least a $500 debit. I have to make a deposit for the $500. I'm sorry, for the $500, and that means I have a zero balance, all right, in the debit column, because that's the normal balance of the account. So my balance columns here, okay, the debit and the credit, um, are the running balance in the account. So anybody who comes and looks can say, well, oh, on 123, I had a debit balance of 1,000, or today I have a balance of 0. Okay, and so that's how the ledger account works, and that's what you're looking at, in the solutions, in the solution manual for those ledger accounts. Now again, this here is just an example. This is to explain the ledger account itself. In the next video, I'm going to pick up and I'm going to actually create the T accounts. So for those ledger accounts, okay, and I will then post the information into the ledger accounts, because like I said, I can't be bouncing back and forth through 10 or 15 different slides trying to find things. It's just an easier format for me to create the T accounts. Okay, so I hope you got that. If not, watch the video again, and if you still don't understand it, feel free to call. But I'll see you in the next video, where we'll pick up from posting the journal entries into the ledger accounts.